Welcome back, friends, to the Global Macro Desk. It looks like it's been about a year since I've been away from my desk, uh, but I had good reason. I've been working on something very interesting. So, over the course of the year, I actually designed a game engine, but it's a game engine for finance. It's specifically for um, our world. And what it is, it's a massive simulation, and it turns out that the data that the game engine generates maps pretty well to the real world. So one of the things this game engine does is that it generates buy and sell signals for stocks at the moment, and our universe of stocks are S&P 500, Dow Jones, Nasdaq 100, and the TSX, the Canadian index. So that's like TSX is like 225 stocks, I believe. All the stocks that are in Dow Jones are already in the S&P 500, and I think there's only a couple stocks that are in Nasdaq but aren't in the S&P 500. So I think that ends up being like 514 stocks overall. And so this game engine, what it will do is it will generate trading signals on a daily basis. So depending on what trading rules you use, whether you want to use one trading rule or multiple trading rules for various different kinds of strategies, whether it's like momentum strategies or mean reversion or uh, even relative value strategies, I think will work. But um, conservatively, what you will have is something like 5 to 10 signals a day, like 2,000 signals a year. And I've done all the back testing that I could possibly do. That's actually reasonable to do because, like, with back testing, you hit a point where, you start having to make assumptions that might not hold in reality. You have to, like, um, you need more and more data, and it's just not worth it. The best thing, you'll hit a point, eventually you hit that point, and the only thing left to do is just to live test a strategy and see how the strategy drives, right? Because you could read every book on automotive engineering or every owner's manual, but until you don't drive that car, you're never going to know how it drives. So last week I started putting in trades, and then it hit me that, this is a perfect opportunity to make some videos and have essentially a live trading journal, because right now I need to figure out what's like what's the best way to actually execute these signals. Like, think I'm basically trying to think about, okay, what kind of position sizing do I need? Do I need to scale into positions, scale out of positions? Um, what kind of horizon do I want? If you basically have like 5 or 10 signals a day, how do I pick which signals to execute on? What criteria do I use to ignore, other signals? So, and then how does my portfolio roll over the course of a year, right? So if positions are being scaled in, and then they're in the portfolio for a while and they have to be scaled out, exactly how to do that. So there's a list of questions that sort of need to be answered, and the best way to answer them is to risk real money, because until you don't risk real capital, you don't know how you don't know how you're gonna do in a real world situation, because life is, this is the real world. This is not GTA or Need for Speed. Need for Speed was actually such a good game. The point that I'm trying to make is that I've done things in Need for Speed that I would never do in the real world, right? So, and that's the same thing for your portfolio, right? Just even trying to figure out position sizing is not a trivial task. So that's what we're going to do. So at the moment, this I started. I put in my very first trade on the 9th, which was last week, and I entered into CDW. I bought 50 basis points. Basis points here means that let's say if your portfolio is worth $100, um, 100 basis points is a percent, 50 basis points is half a percent, and I've just allocated 50 cents for every $100 in my portfolio to this trade. And right now I've picked 50 basis points. Because this is the simplest thing to do. This isn't the optimal thing. This isn't the correct thing. It's just this is where we begin, right? So um, if we begin here, because remember, if you have 2,000 signals a year, you don't know how big your portfolio is going to get, right? Like how many trades you need to get into. And because every trade has a different expected value, 6 months out or 12 months out or whatever the horizon is, there'll be some signals that have an expected value of 90% over the course of a year, and there'll be some signals that have expected value of, let's say, 20% over the course of the year, or their distributions might be very different. So if you begin, let's say, at 50 basis points for every trade, uh, the nice thing here is that there is no single trade that could make or break you, right? Because you don't want to be in that situation. Because here's the thing: CDW, CHD, like I've never heard of these stocks until the day they actually until they popped up as a buy signal. So I don't actually have any conviction in any one of these stocks, right? This is not like, this isn't like traditional global macro where you build up a thesis and then, you build up conviction in the thesis and then you know, you bet a significant portion of your, whatever your, you bet a significant portion of your portfolio into that, and then, you ride whatever wave you need to get to the end. Here, I don't know what CDW is. All I know is that it has a good looking payoff, and if let's say a year from now, this stock actually drops 50%. Well, what am I going to lose? You know, I lose a quarter. 25 basis points. So it doesn't really break me. But the idea here is that if you take enough trades that have, let's say, a double-digit expected return, the hope is that your portfolio as a whole will converge to a double-digit return over the course of the year. And that's what we're going to test. That's what we're going to do at the moment. That's what we're doing right now. So on the 9th, I allocated 50 basis points at 212.97. For CHD, I allocated 50 basis points at 102.04. On the 12th, I allocated 50 basis points to HUBB, 50 basis points to ERO at 379.22 and 25.88, respectively. On the 13th, I allocated 50 basis points for, I guess, an average price of 17.60 Canadian dollars to PXT. And yesterday, I allocated 25 basis points to CNR at 154.34. And I'll explain why I did 25 basis points for CNR and not, the 50. So let's just see. Let's just look at some of the data that the game engine actually generates, right? Um, well, you know what? Let's just go full screen, and we'll go from there. All right. So when it comes to CNR, all right. So the game engine will generate these trading signals, and these red dots are your entry points. And you can see that for quite a few of these entry points, the markets, the forward return looks visually looks pretty good. For some of them, it doesn't look good, and that's expected because this is a real trading strategy, not a fantasy. It's not what you generally see on Twitter or whatever, where every single trade is like not only a winner, but it's a triple digit winner. So for CNR, these are our entry signals, and this is just a regular scale. The next chart is the top chart is actually log scale, so you can visually, it's nicer to see. It's visually more appealing, and it's visually more useful actually, especially when you have like right now this stock is only going from let's say $2 to like 175, but when you have stocks that start at 2 and then are at like 5,000, at a 5,000 level, it's you do need to look at things on a log scale. Now, the bottom chart here is F7200A. This is a specific model in the game engine, and what it means is that there were 700 there were 7,200 agents in the simulation that were used to generate this data. And you can see the entry points for this signal, the red dots, where they are in terms of the index value and how those index values map to the stock. Right now, this table is really important because let's see if we can. I hope this is clear. So basically, what this table is saying, what this table is showing, um, these are your horizons: 1 month out, 2 months out, 3 months out, 6, 9, and 12 months out. So your median return 12 months out that I'm expecting is 21%. My best case scenario, I would say, is something like 89%, and my worst case is minus 10%. Right? So when you have a payoff that looks like this, it's something that I'd be willing to bet on. It's not the um, it's something that I'd be willing to put 50 basis points into, right? So if I say a year from now, you on average you can make something like 21%. Your high end is maybe 89%, and your low end is minus 10%. Wonderful, right? And it works the same for all the other horizons. And we sort of want to be in this 6 to 12 month range because we want the positive drift of, let's say, the stock markets to work in our favor, right? Because the shorter your horizon is, the more noise that you're dealing with, and the more you know generally signals need time to play out, and especially if you need a longer term horizon. uh, that's always worked generally well for me, and I think the 6 to 12 month horizon is what we should be going for, right? So um, at 6 months out, this is the distribution. The blue line is a distribution of returns that you should be expecting. At 12 months out, you have another distribution. At 6 months out, this black line is your expected, let's say you could call it your expected path, right? So here I'm expecting something like a 14%, and that maps well to here, like 14%, with a spread of, this best case and worst case. And when you have a distribution, like like when you have payoffs that look like this, they look like a good bet, and willing to I'm willing to take that bet, right? 1 year out, this chart is really nice. So this is the payoff of every single time the signal triggered, right? So your median return is 21%. Your best case was something like 80%, 89, 90%, whatever it is. And your worst case is something like minus 10%, minus 15%. And that's good enough. And this chart here shows you your probability of your profit and loss being greater than zero over every day out to 1 year. So 1 year from today, you can expect the probability that this position is going to have a positive value of 91%, right? The 92%. So there's a 92% probability that 1 year out, CNR is going to be CNR's payoff is going to be positive, right? And the bottom is your expected path. All of this is nice. The game engine just generates all of this. Um, what I will need to do is I'm planning on just turning this into an app. So instead of having to do all this copy paste and um, generate like there's a lot of like manual work that needs to be done to make this happen. What I'd rather like to do is just turn it into an app, and I think I'll be making you know what, a terminal app might just be the correct answer here because I don't want to deal with web apps and JavaScript. So this is what the this is what the game engine generated. This was the news for CNR, right? So Canada's government rejects call to intercede in rail dispute. So apparently CNR, Canadian Pacific, um, yeah, Canadian Pacific, Kansas City, CNR, and apparently the Teamsters are all in the middle of a dispute. The government doesn't care or doesn't want to intervene, but if this goes south, it could disrupt the movement of goods across the country, and I believe in America as well. So, I guess there'll be a lot of noise surrounding this, but it would be highly unlikely that um, all railway goods will stop moving because of this dispute. I mean, if that happens, that would be a colossal blow to the Canadian economy because that's what our economy is. Our economy is really just a set of railway lines and Trans Canada Highway. We are a commodity nation, and America won't be happy, right? So eventually, this will be sorted out. And because of these headlines, um, Norfolk Southern closes all intermodal facility. Um, there's potential stoppages. CN has issued an embargo on all yada yada yada. All good and well. So what I'm saying is, let's put in 25 basis points right now, and once there's a bit of good news or there's some uh, silver lining that shows up, we'll add another 25 basis points, and then that should be our CNR position, right? So what I'll be doing is every single time we have a working signal, a working trade, I will be making a video of it, and we will keep this as a live trading journal. So um, I think this will be extremely useful for everyone involved. And I do I actually have anything else? No, I think we've covered everything, haven't we? Well, thank you very much, my friends. See you next time. Hopefully Monday.